All right, let's begin our conversation by first understanding your assessment of India's economic growth trajectory of the past decade. And according to you, what factors have contributed to its remarkable ascent as one of the largest economies in the world?
Yeah, so I think in the last 8 years, I would say 8, 9 years, okay, we have seen that India has undergone structural reforms, right? We have seen the reforms in the banking sector, right, by the Banking and Insolvency Code, which was introduced. We have seen reforms on the GST side, okay, which has been a big success. I mean, that has led to government revenues, okay, growing, and tax as a percentage of GDP has gone up significantly. So that's another reform. We've seen reforms on the real estate side through the RERA, which has really galvanized the sector, and we've seen a lot of organized players now coming into this sector. And apart from that, the biggest reform I would see be the Jan Dhan, right? So the whole opening of bank accounts, and then Aadhaar card, okay, identifying every individual having an identity, and then integrating with that the whole digital ecosystem, right? So that has enabled the country to really transform itself, and especially during COVID, we have seen that helped people to really go onto the digital side much faster. So all these reforms, what we have done, and most importantly, I would say it's on the manufacturing side, right? Because in the last, I mean, since 2012, 13, we saw that investments to GDP has really come down significantly. The private sector capex was lacking, and the government effort to really get on domestic manufacturing back, I think that has now only gained traction, having put in the places like tax structure has been rationalized, taxes have been cut. We've seen that logistics costs, okay, which used to be very high earlier, that has come down significantly and likely to go down further. And as a result, the whole ease of doing business in India has improved significantly, and we are seeing now slowly the capex cycle starting to recover. Also, the government efforts towards getting investments back through the production linked incentives scheme, the PLI schemes, has been now announced not only, but we see a lot of players coming in and taking advantage and announcing large capex plans across various sectors, be it auto sector, electronics manufacturing, consumer durables, pharmaceutical API, the green energy sector. So I think all these things have actually led I mean, more importantly, I would say that the outlook from here, okay, looks to be far more steady based on these structural reforms. And I think always, and apart from that, I think the government spending in the last, whatever, 5 6 years has really been fairly strong, especially on infrastructure side, which has actually kind of balanced out the slowdown in the private sector capex over that period of time. So I think given that now we are poised here, and also I would like to add here that structurally India in a geopolitical scenario where India is now, it's in a pretty advantageous position where we are seeing that the global supply chains, right, are now trying to reimagine and trying to look at alternatives to China. And India is emerging as a destination, okay, where they would like to set up additional manufacturing facilities. So the whole China Plus initiative, which started pre-COVID, has gained momentum post-COVID because the disruptions what they saw is also galvanizing India. And in an environment even when the global growth is slowing down and concern, India is able to garner a larger market share. So I think all these things are leading to a India GDP growth we think can, the potential growth at around 6.5%, I think is something which we can sustain despite some of the challenges, okay, which we are seeing in the short term from the global front.
Indeed, a host of factors, as you have broadly outlined, working together in making sure that the India growth story keeps rising. And as you mentioned, a lot of structural adjustments have gone into work. And as a result of it, it's not just restricted to a few, one or two sectors, but rather a whole host of sectors are growing. And India's place in the global value chain, that's key right now, as it rises and gets integrated more and more into different global value chains. The growth story is going to exponentially. Taking that into account, let's also see for the average viewer who will be asking, fine, that's the growth story, but what's in it for me? With India's rise, Mahesh, as a major global economy. What implications does this hold for retail investors looking to capitalize on the country's growth stories? And in your opinion, how can retail investors align their investment strategies to benefit from India's economic progress?
So I think investments, when you're investing into the market, I think the underlying corporate earnings growth is what will drive the returns for investors, okay, in the longer term. And that in turn is dependent on the overall economic growth, how it shapes up. So I think we think that India is set to grow at a growth rate of around 6.5%, or even possibly higher if there is support from the global recovery. And in that scenario, what we're seeing is now that overall there are a lot of sectors which are now doing much better. Right? Earlier, it was only a few sectors which were contributing, but there are multiple sectors now which are doing well, and as a result, we think that the corporate earnings growth, which is a reflection of the not only domestic economy also, but how our exports are doing. I think so that is likely to grow at around say somewhere slightly higher than the nominal GDP growth. So if a nominal GDP growth, your real GDP growth around 6.5%, and potentially later, okay, going around 7%, and inflation around say 4% or so, they were looking at around 11% nominal GDP growth long term, and earnings growth could be slightly better than that. And I think market returns will probably follow that. There will be a lot of companies have also actually tried to improve efficiency, so the earnings growth could be tad higher than the nominal GDP growth. And the market's valuations, if the starting point also, if you look at, is not very high, right? Markets are near the fair zone compared to the long-term averages. So retail investors who are looking at creating long-term wealth creation, I think as the economy grows, and mind you, India's economic growth is more dependent on domestic factors, because our demographic, as you mentioned earlier, is in favor for us. We are a country which is still young, unlike China probably, which is now aging. So we are probably 20 years behind China, and what growth China saw in the last 20 years. We might not probably grow at that same level, but that gives a good runway for us for the next 20 to 30 years. India will have the largest working age population, okay, in the world, which will also support that. So given that, I think investors can expect, I think long term, if you look at returns in equities have been around 12-13%. I think we should, I think, continue to do that even in the next decade or for the next 2 decades. And the government also, I think the leadership also is, I think, if you look at the vision for India, which has been set out, also is in that same direction, right? So I think there will be ups and downs in the markets, okay, because of global concerns. But I think if you continue to invest in the market at various, I think you should have a steady return from here on.
I think that's an important message, not to have a short-term view of the market, but look at it from a long-term perspective, especially as that runway gets set currently at a GDP growth rate of 6.5%, one of the fastest among major global economies, and considering demographics are also on India's side, and with such major structural adjustments coming in terms of reforms from the government and a lot of activity happening, it will be interesting to see how the curve keeps going up. But to make the conversation much more specific in terms of the key points of the India growth story for sectors, which sectors, Mahesh, or industries have been primary drivers of India's economic growth in the last decade? And are there emerging sectors that retail investors should keep a close eye on for future investment opportunities?
Yeah, sure. So I think if you look at India's overall GDP, you have consumption, right? And then you have investments, and then there is the next net exports. Okay, either 3 large buckets which are there. So I think primarily in the last decade, if you look at it, it was consumption, okay, which has been the primary driver of growth, large, because consumption is almost 60% of the GDP, and that has been steadily growing. We have seen that investments haven't really contributed much. It's been coming down primarily to the 2 factors, right? One is the real estate sector, which was going through a downturn, right? From 2013-14, we saw it went through a large period, almost 8 years of correction, and is now kind of pulling back in the last 2 years. Also, private sector capex has been slow. So in that period, it was government spending, okay, on infrastructure, I think, which was substituting or compensating for the lack of private sector capex. And that was really the story of India in the last decade or so, which was there. So consumption, because of demographics, per capita income going up. But I think going forward, I think while consumption will continue to be the mainstay of growth, within consumption, what we'll see is that discretionary consumption will start to increase significantly, because India is at an inflection point where the per capita GDP is now crossed around $2,500, and at that and aspiration level, they say young population, the aspirations levels are much higher. We're seeing a lot of retail consumers trying to now consume, okay, even on credit, right? So retail credit penetration has also gone up. So we think that the discretionary consumption, which is like 25% of the consumption, will go to around 40% in the next by 2030, and that will be a big story, really, right? Which investors could play that. So that is including all the consumer discretionary, including auto, retail sector, consumer durables, apparel, footwear, spending on travel, tourism. So these are the sectors I think which will do well and benefit out of that. So that's one broad theme which investors can look at. The second one is really, as I said, this time around, we are seeing that the whole investment cycle now is starting to now pick up private sector capex, and still early days, but I think the whole environment is conducive, right? The banking system is in a fairly good shape. Corporate balance sheets are deleveraged, and capacity utilization levels are now like around 70% or so. So I think that could be another theme where private sector capex investment cycle likely to pick up. So that could be another theme which one could play out over the next, 3 to 5 years. Apart from that, again, within that whole capex, real estate is another sector which is seeing a good recovery. There were a lot of inventory which was their system, which has now been corrected. So, and I think now the demand is coming in from genuine buyers, which is there, right? There are a lot of reforms which have happened. The confidence of buyers has also gone up, and overall interest rates have also kind of, well, they've gone up recently, but structurally they have come down. So we're seeing the real estate and the related sectors, right, will do well in the coming years. So that's another theme which sectors playing out dependent on that, okay, we think will do well. And more on the global theme, I would say that the whole digitization, okay, transformation which is started post-COVID is likely to continue to gain momentum. And while India currently, we have seen some slowdown globally, right, on the digital side because of growth concerns, but I think it's a more structural story which will play out over the next, say, 3 to 5 years. And India is very well positioned to really capture that, right? The IT sector, and also in India itself, we are seeing the whole digital transformation, okay, which is happening, okay, which will be another broader theme, okay, which will drive Indian economic growth, but also for investors really to make money from that theme, I would say.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.